welcome back. We're going to break curriculum a little bit here today because a number of you are grown quite antsy. I think you're going through withdrawal for lower time frame stuff, so I'm tossing this in here to just to jolt your attention because I know a lot of you aren't going to be trading long term. So we're going to take a look at some things this morning. We have 8:30 news that we'll take a look at. If you haven't checked your Forex Factory or equivalent economic calendar, let's take a look at the Forex Factory website's calendar. And we'll see what we see. Okay, you should be seeing the economic calendar for today. So you can see at 8:30 we have Canadian dollar, NHPI, and unemployment claims for the dollar index. So I'm expecting some movement for the CAD. We have at 11:35 a.m. a speaker is going to be jawboning today as well. At 1:10 we have FOMC member Evans speaking. So if we're going to see anything, it's going to happen in a flurry between 8:30 and I'd say 10 o'clock in the morning, and everybody will probably move to the sidelines from that point on and wait to see what everybody has to say in regards to their respective currencies and countries. 1:30 p.m. we have British Pound, Bank of England, Governor Carney speaking as well. So, and tonight we have 7:30 p.m. Australian dollar monetary policy statement. So I'm going to talk a little bit about Canadian dollar this morning. That's the one we're watching for the New York session. And depending upon what we do on unemployment claims basis the dollar, that'll give us some indication of what we may see tonight during the Australian New Zealand session going into Asia around that 7:30 time. So we'll see. Let's go back over to the charts. Okay, so this morning we had a little bit of a push on dollar higher, and then we're back to neutral state for it. And we have a Canadian dollar chart here. Okay, if we get an expansion on the downside, could be looking for the liquidity below this low. And the boxes you're seeing here are super secret sauce. I can't talk about that. Black coats and straight jackets will show up in my house if I do that. I'm just kidding. It's just a delineation from midnight to noon New York time. So it's a 12-hour window. I'll tell you how to use all that stuff when we get into this intraday business. But today, we're just following along with price action, looking at some things. And I want to take a look at the Aussie. Aussie, I think, may want to run to catch up with the movement that's been seen in gold. I like the liquidity pool up here. So that gives us a, I like 77.7700 level. I like that level from where we are right now. So we could see that if we get the right conditions between this morning at 8:30 and 7:30 tonight. So when the monetary policy announcement comes out this evening, my time, 7:30 p.m., that may be an area it reaches for. So we'll be watching that. But looking for this morning. Got about 17 minutes, 16 minutes before unemployment claims come out. It already looks heavy as it is now, so it may just make a straight run for it. I'd like to see it come back, trade into this level here. It may give us an opportunity to paper trade a move. And the reason why I have the box shaded around noon, midnight to noon, is because that's when I told the central banks to be able to reach me. Anytime before that or after that, it's just not a good time for me and my family. So let's get. I'm testing your attention this morning, folks. Okay, I've been away from intraday action as well, so I'm going to be a little frisky. Noon is usually the cutoff time for us in FX. Usually it's about the end of the battery life generally, and midnight is when we start our new financial day, so that's the reason why it's blocked in. If you look at the day-by-day basis, you can see the majority of the moves are always encapsulated by that shaded area. So that's the skinny on that. If you look at everything before it, it's usually some accumulation phase, and everything to the right of it or after it would be a reaccumulation stage, or where it goes into consolidation. Now there's a small little bit of institutional order flow off of this level in here, so you got to be mindful of this one around that 31.10 to 31 big figure. So we'll see if we get any kind of support there that would cause us to come back up and get a retrade back into 31.15, 31.20. Don't want to see it get too far ahead of itself. If it does, it's just a wash on the 8:30 announcement. We want to keep some range open so it frames the opportunity. If it trades all the way down or gets real close to it, it kind of makes the setup moot. Check gold real quick. Silver. I really like silver 18. I think it's poised to run right up in that level there. Just a few more minutes and we'll have our fireworks. Check the dollar. Yeah, a few of you have been pretty pointed in your emails to me regarding when are we going to go back to live analysis intraday. When we get to that stage of our teachings, then it'll be a lot of it. It's all it'll be. But we're focusing on higher time frame things that allow us the framework, so that way when I'm talking about the trades, intraday and short term, I won't have to go through a whole long-winded explanation, and there won't be a million questions like it usually is. Like if I go and click on the box over here, yeah, it's just nonstop questions, just a flurry of everything going by. So to avoid all that and to stick to the curriculum, we try to keep our focus on the topic at hand. But to break up the monotony, I'll sit with you guys today to give you a little bit of an intraday perspective. Now, there's not really much in way of a real excitement at this level. There is liquidity below these lows in here, though. We have layered short-term lows. In other words, we have a higher low here, a lower low, and then a low here. So there's a lot of liquidity resting underneath this reference point here. And notice that it's also an old area at which prices moved away from, and it's done it twice. So this has already been used up, in my opinion. I don't think there's going to be a lot of orders here. There may be a draw to that level, okay, and then we may bounce through. I'm sorry, not bounce through, bounce off of it, and it may become an area of short-term resistance up here. So kind of like, think of it like a inversion level or mitigation block. And if we get below this low of any significance, ideally you don't want to see it punch right through it and keep on going. You want to see it trade down through it, come back up, fail at a higher level, and then go back down one more time through this level. Then we start eating into all this buy side delivery to get rebalanced back down to these equal highs in here. So that would look like this. $30, $35, $30, $40 in that area. Let's stay open on this candle here. Yeah, 30, 40 I like. So we'll see in a few minutes what we get in terms of the unemployment numbers and the report for CAD. Bella. Okay, take a look at British pound or cable. All right, so on the British pound, we have a really, really, really nice liquidity void in here. Now, inside this void, just to the left of it, we have a breaker. So you have to be mindful of that. Now, so when you see something like this, there's your breaker. And we have price trade down here, here, here. So from this low up to the close, buy side delivery is offered, but watch what happens over here. It's all leaving here. So even though we've had some balancing out in this little wick, we had the last up candle, which is the bearish order block. So when price left this low, from that low of that up candle or green candle, that moment there, that's what starts the sell side delivery only. So that's at the moment right there. Let me make this like this. This right here is a fair value gap from this low down. Then we got another exposed area from this low starting here. Let me frame it. It had to go and move off that line. Like, I hate when it does that. It's very frustrating. So we left this low here. So from this point here down to our present short-term high here, we have a fair value gap here, or liquidity voids. A little bit more of a void in here. It's larger range. Same thing here. So those are two upside areas at which price should reach up into the close in. So it looks like this. There's our level on the upside. And our next level would be here. Okay, so that's how you get the level sometimes you see me having on my chart in the form of horizontal lines while they're there. Now we're looking for the upside on pound dollar to reach up and trade into that area, fill that in. But initially in short term, you would have to get to this one first and then close it in here. Very, very nice little pocket of sell side delivery only. So we'll be looking for price to try to reach up into that. Doesn't have to happen today, and could potentially be something that ends up seeing fruition by Friday. But if it doesn't do that, we'll be watching that going into next week. So this is a really good level to be watching if you are a day trader and you're not really following along and studying the higher time frames like we're supposed to be doing. Okay, dollar CAD, let's keep our focus. Got about 5 minutes before economic calendar news events are released. Now we're below a short-term low intraday on CAD. And what you don't want to see is, you don't want to see a lot of give back below this low here. There's been sell stops. We're already absorbing that. They're gone. So you don't want to see it trade back up much when the reports come out. You want to see it come up a little bit, have some difficulty there, and then immediately find some kind of a brick wall type effect right around this level right here. And what I'm highlighting is the last down candle right before the up move in here. So they should be mitigating any of those buys that they used that saw a movement higher here. They should be able to pull them off or mitigate that, and that would promote freedom for the market to trade lower. And that would, in effect, allow cable to rally, Australian dollar to rally, and I don't really care too much for euro. Euro's in the mud right now. Should be a little bit easier to see now. Very nice intraday action for dollar CAD. A little bit of a void in here. Came back up, closed in that range. Lower. Last up candle during London. Came out, traded back into that, rejected it nicely. We're in the heart of New York now, so we're 2 minutes away from the economic calendar. Again, I'd like to see, this is what I'd like to see. I'd like to see it trade up and hit this level here on the news, but then like really stop right there. I don't want to see it expand lower before the news, because then it's going to be indicating it wants to reach for sell side liquidity and then pair that up and then run the other way or up, which just doesn't make sense for me in here. Just over a minute, and then release of the news comes out. A quick look at the dollar index. Dollar stuck. We have buy stop up here, sell stops below here, and we're right in the middle. No real clear indication what it wants to reach for intraday. Okay, less than a minute. Okay, 8:30. We should see some volatility in here now. No significant movement yet from the dollar index. Cable still flat. Aussies give back a little bit. We're watching this level here on UsdCad, 31.20 or thereabouts. There's your level, 31.19. Right to it. Now I want to see if there's any willingness to see it go lower from there. Does it reject that level? Does it hold there? Does it drive through a little bit deeper? We want to see it react aggressively away from it. That would indicate that they're mitigating any longs they had in here, and price would make a rotation lower going to potentially the 30.77 or 130.80 institutional level. To see the reaction off that level. So you have to watch this short-term low in here. The low at, let me get to show up, 3105. If it trades a 31 big figure, then it should expand down below, and the algorithm should seek liquidity below in the realm of 130.90, 130.80. Anything above this level in here now, it trades back above it, it's going to want to run the stops intraday up here. Dollar index just simply can't move out of where it's at. A lot of people on the sidelines today. Some big talkers today. It feels odd looking at these lower time frame charts. I mean, I'm used to looking at the daily chart now after so many weeks. Watch and see if this candle here wants to flip and go bearish. That would be nice, because we want to see its willingness to get below this candle's low. If it does, we want to see expansion lower. That's what we'd be looking for. We don't want to see it just tip its head below that low. We want to see it run and start to expand away. There's nothing wrong about intraday charting or lower time frames. You just got to keep it in balance. Don't. I think if you look at what's been shown thus far in 2017, you can see clearly there's an advantage of knowing what the higher time frames are doing, and then how many times really do you get a high probability entry or setup on a lower time frame. It's not as many as you probably thought. And that was the goal, to get you thinking like, hey, look, the answer is not in the intraday. The answer is in the higher time frame. And then use the lower time frames to get yourself in with a low risk, high probability entry. But there's a framework that goes along with all those ideas, not just because you're on a lower time frame, therefore it's going to be a lot of trades. Well, there's a lot of trades, doesn't mean there's going to be a lot of profitability. I would not be trading today. And like I said, I prefaced it by before I started this session today, and I kind of mentioned it last night in the recap video that there's a few of you that are just really, really being impatient right now. And I'm just going to be bold and just say it like it is. I know what you want. You want me sitting here telling you what to do intraday or giving trades, but I'm showing you how to trade. And to get to that point, we got to go through the material. So I would not be trading today, but I'm actually sitting and forcing myself over the charts to tell you what I think price may do. Given the economic calendar, like we were saying this morning, there's a couple different things in the way, and you have a very small pocket of time before those impactful news events would be barriers to the runs on liquidity. Now, thinking in terms of, like, say this 15-minute chart, say this was a daily chart, okay? The reaction that we saw off this level here, okay, it went up, it hit it, and it retraced. Now, that could have been a number of pips, a lot of pips, and that could have been an intraday trade, whereas in this case, it's such a small little range because price is fractal. All these same approaches, if you applied it to a daily chart, or say you applied it to a weekly chart, say this was each one of these candles represented 1 week, not 15 minutes. The same elements are there. It's mitigation. It hit it, and there was a reaction. That much of a reaction on a weekly range would be significant. On a daily, it'd be a significant intraday trading opportunity, but not so much on a 15-minute time frame. Each element, Jeff's got a good question. At what point is all this going to be tied together from higher time frame to lower time frame? So what we do is we give the framework for each discipline. Like right now, we're focusing primarily on swing trading, so that's going to be based on monthly, weekly, and daily setups and executing on a 4-hour. And then we'll do working from a short-term trader's perspective next month. And we'll be doing basically the same thing we're doing for this month, but just focusing on short-term trades where you're really executing on an hourly chart using the daily 4-hour. But referencing everything we've learned in January and in what we're going to cover here. So what I've done is I've made the perspective from a macro view using all the higher time frame things, and I slowly gravitate you back down into these lower intraday charts, down into a 5-minute chart. So you'll be able to go insane with reducing the number of lots you can do by keeping the risk still relative to whatever percentage you want to have on your equity base. So at the end, when you're done the mentorship, you'll have every facet of how I interpret the market. So you can go in at any time frame and trade it. But at this point, because we're in individual disciplines like swing trading, you'll know how to use the respective lower time frames to a 4-hour chart at the end of this month. You don't need anything less than a 4-hour chart to trade profitably, swing trading, but you'll end up using by default, because everyone's going to want to do the same thing when they learn it, to reduce the risk down to a very, very small number of pips and still have the precision that's that's available by doing it using lower time frame charts. I appreciate that, Casper. The appreciation for delivering it the way I'm doing it. I know most of you, if you were able to read the emails I had, there was a number of you were saying, I'm not so sure this is the right way you should be teaching. But I just keep referring back to the fact that this isn't the first time I taught people doing this. So, like I said, you got to trust me. If you don't trust me, there's no point in you staying here. Why use the down candle? I'm assuming that you're referring to this one here, yes? I want to make sure I understand you before I go forward. Okay. When the markets create a movement higher and a trade higher, not just on one candle, but a series of moves or a particular range that's considerable. Now in this time frame, this is a considerable move. It stands out. It's an obvious price swing, yes? Okay. So we understand that if this market moved higher, there has been some measure of buying. Now, retail, small, little fish can't move price like this. So there has been some buying in here. When this occurs and it causes displacement in price, because the price is only going to be permitted to move when it's favorable for the bank or the institutions, the down move right before that, smart money buys in down candles. So if we have seen a move higher and then we've moved lower and broke that short-term low right in here, which is what we've done prior to us coming on to the live session this morning, when that low is violated, the expectation is, okay, this move higher, and we have an expectation for $CAD to move lower. That's what we were assuming this morning going in. Anyone that has a long position in here, they're underwater at this point. To mitigate that, they would allow price to get back up to this down candle where the last buying took place. When it trades back up to that level, that's when mitigation takes place. That means that they can square their positions off and move to the sidelines or add new shorts. Does that make sense now? Some of them are the question is how are some of the people that I've trained in the past doing? Some of them are fund managers. Some of them, I have two guys that run prop firms. Most of them are just independent traders. They don't do anything but manage their own funds. I try to keep the conspiracy stuff out of these types of sessions and from the mentorship. That's why I keep the free Twitter and I keep the YouTube channel open for that. I try to keep it business here only. All right, just pay attention now. We have price opening a new candle. We have a nice rejection in here. We want to see price, we want to seek out liquidity below that low. If we get below this low in here, we want to see expansion. That means that the candle should become bigger and longer and be bearish. We do not want to see it come back up to this level here again before it reaches to the lower. Now, it doesn't have to get all the way down to 30.80 or anything like that. That's the objective we're reaching for relative to time. But I'd like to see it make a move forward before equities open. But I'm not going to stay with you that long. I'm going to be with you another 5 more minutes, and I'm going to close the session. All right, Gerard is here, so we're going to end up closing session now. He came in late, so we're going to have to punish him. It'll be in the recording. It's not terribly exciting. We're just looking at the small little reaction off of mitigation block. On a personal note, Maryland, in our area, they closed, well, not closed, but they delayed schools several hours this morning for nothing. We don't have any snow out here. It was a little bit of flurries. So I'm trying to get this done before my little ones get up. Once they get up, I will not be able to talk with you. My wife is not with me today, so she can't corral them. As far as platforms that I use to trade and how my setup is done, you'll actually get to see my whole getup. When we get into the day trading model, I'll actually show you my coveted trade station, how I have it set up so you guys can see all that. Let's take one quick look over to dollar index. Yeah, it's stuck. With the dollar moving nowhere like it is here, it's going to be problematic for the market to find any kind of legs. Aussie dollar's trying to make a run for its intraday high today. Might get it. I really like these levels on cable. To have these levels on your charts, folks, just be mindful that this is probably where we're going to see cable reach up into. If we consolidate in here, and as a closing note, if we consolidate here and don't make a move above this level in here. We may be just consolidating for the news to come out a little later. I think at the 11 o'clock hour, there was something else we had for Canadian dollar. It may see its movement on that release. But in here, I would not be favoring a long. I would look for continuation on the lower end, but being mindful that we don't want to see it trade back above that level because it's already traded there. It's already shown a willingness to want to give evidence that it's mitigated long positions in here. So we want to see it erode below this low and start to show some expansion and reach for a, you want to look at 3090 and 3080, but it could go down to 3075 on a spike if it can get down there at all. But given the fact that the dollar index is just held really, really tight in a range, I'd like to see it make a run for its sell stops in here. That would be nice. That would give freedom for dollar CAD to trade lower. But given where it's at now, it's just not that high probability. I really, really like cable though. I like that. Depending upon how far we get above this short-term high in here, if we can come back down into this down candle, assuming after we get above this high, if it doesn't run too fast, if it comes back down, gives an opportunity to touch just to high that candle, that may be a buying opportunity to get you to 2610 to, what's the other level? I got to get this thing out of the way. 2640. So that could be your levels for Friday on cable. Yep. Nothing terribly exciting, folks. The highlight was just a small little reaction here. Big deal. But that's the breaks. We will be, again, we're going to have a live session tomorrow early again. It'll probably be another 8 o'clock session. I have to make sure I have plenty of time to go through the two teachings and not have any errors. Last month we had 2 slides that had issues I had to resolve at a later time. So I'm going to have a lot more proofreading time and go through it. So by having me get the live session out of the way tomorrow early, that'll give me a lot more time to make sure I can close that delivery window by 8 p.m. on Fridays, that we have all your content delivered by 8 p.m. and you can have the whole weekend to go through it. I'm going to close it here. I'm going to, real quick, as it relates to brokers, I promise I'd mention this. Thank you very much, Jeffrey, for prodding me about FXCM. FXCM, obviously, if you haven't already heard about it, they have been slapped by the CFTC, Commodity Futures Trading Commission, and removed their ability to operate in the States. For those that have accounts with them that are in our mentorship, they have been reaching out to me in regards to my personal opinion. I sent a tweet via the free Twitter because I got more people following me on that one than obviously in the mentorship. So I just basically said, in my personal opinion, and I don't have any affiliation with them, but Oanda, I had experience with them. I had an account with them in the past, so they treated me pretty fairly. I didn't have any real major complaints about them. I did tell everyone to stay away from FXCM, but there's a few of you that are taking a look at other brokers that I do not have experience with, and I'll invite you all to exchange your ideas and experiences about other brokers through the forum. Use that medium to do that. Me personally, though, if it's a retail brokerage firm, gun to my head, it would be obviously Oanda. So I'm entering the Robbins Cup, and they use Gain for their Forex clearinghouse. So I don't have any experience with them either, but you'll obviously know the experience because it's going to be on my FX book, and it's going to be linked to the World Cup results. So it is what it is. I don't know how they're going to treat me in terms of customer service and execution, but you'll certainly know all about it. As a secondary side note, the things that I do in that account, I'm going to be doing small little videos when I can, very little small pieces explaining what I'm looking to do, why I'm trying to trade, what I'm trying to trade. because I want to document it as much as I can. I'm not sure how I'm going to deliver that, but it will be on YouTube. And I don't know if I'm going to release those videos publicly to everyone or if I'm going to make that available just to you all. I don't know how I'm going to do that, but I know I want it documented so that way I'll be talking about the setups I'm going to be using in that. So everything, I'll try to keep it as I don't know. Let's put it that way. I don't know how it's going to be done, but I know it's going to be through my FX book, and my name will be on the top of that list. So Richard Hom will no longer be the top of that list for 2017's Forex division. He was at 90%, like 96% the other day, and he just lost like 30% of his equity in one day. So it ain't going to take much to get a couple 100% over top of that. So I'm not worried about it. But I'm depositing money the last week of February because I want to make sure I get through this month's content and build in 1 week's worth of lessons so that way I always have 1 week ahead. Right now, as it is, I'm doctoring up the notes that I have and producing them on a weekly basis. So if I'm going to be doing any contest type thing, I want to have at least a buffer of 1 week of trading content so that way our lessons they're not affected by it. So the trades I'm going to do are real trades that I would be doing normally. I'm going to be risking 5% on all the trades that I do in that contest. So that's what my equity gearing is going to be. So all my trades will have a maximum, not that it requires it, but I will allow it to 5% risk on each trade. And I'm going to basically try to do my best to do better than I did when I was trading against AMS Trader. So that's the business. They require you to open up with a minimum of 5,000. So since it's a percentage basis only, I'm only going to use the 5,000 to do it. They don't show you like balances or anything like that. I'll use the MyFX book for that purpose. All right, so that's the business. I'm going to try to hit 12,000% return and destroy Larry Williams's record on that website. So I'm going to try my best to do that. But right now, the first month of the year, they're just not really good trading months to do. So I've allowed the folks to show. I wanted to see who stands out right now. And so far, the guy, Richard Hom, he's the one that took the lead, and the highest he had was 96% return. So I'm not convinced that that's going to be a problem. So I'll be working my tail off going through March. So March 1st will be my first, I don't know if I got to take a look at the calendar, but March will be the first trading. I'll be making available my FX book to the public, letting everybody know that I do have deposits on with Gain, that I am linked up with Robin's World Cup, and that's the business. So it won't affect our mentorship. A lot of you actually been chiming in saying, I'm doing too much. No, once I get it set up, it's just making trades. I mean, it's not like I'm doing anything really outside of what I normally be doing. I'm just going to be making trades to another additional account. I don't know if Larry Williams' seminar I was in the other day is available, but there's a couple things that I want to make note of that he mentioned in there that I thought were interesting. But that's the business. So I'm going to close this one here. I'm doing a little bit of a ramble now, so just be mindful of this level. We don't want to see it give up. We want to see it expand lower. It might do that intraday after the 11 o'clock hour news, so just be mindful of that. And pay attention to your Twitter tonight around 7:30 my time, because we'll probably be tweeting about the Australian dollar. Around 7 o'clock p.m. my time, have your forum open and have it so that way when I send you a tweet, when you click on the link in the Twitter, it'll take you right into the forum. If you don't have that set up, it slows you down. Okay, so just be mindful of that. And tomorrow, look for pound dollar to try to reach for these levels as well. And if not, we'll see those as objectives for next week. So there's a little bit of a range in there for you guys to be monitoring. Until I talk to you again tomorrow, and I'll give you a recap video tonight, but I'll talk with you guys live tomorrow, again at 8 a.m. New York time. Wish good luck and good trading.